I mentioned the Nigerian brothers making moves in the market today. We wanted you to know about John and Pete now joining us. Doc, you're up first. It's good to see you. Thanks for coming on today, even though it's not a regularly scheduled day. What are you doing?
Sure. Well, Scott, right at the end of the show yesterday, somebody stepped in a big way into the SPXU. This is a triple levered ETF that's triple levered inverse. In other words, obviously, it goes up as the SPX goes down. And that was pretty shrewd timing, you might say, Scott, because obviously we got the news out of Tokyo about no visitors at the games and so forth. And the markets were tumbling this morning. Those 17 calls, that's the strike price they bought, which were at the money yesterday, were purchased for about 40 cents. Those shot up, tripling the move in the S&P 500, and we took off that trade, Scott. So 42,000 of those. That's the biggest trade we have tracked in that triple levered ETF. Now, the good news, if you want to view it as good, I guess, is that this was a very short-term trade. The options expire next Friday, so it wasn't like somebody was projecting, Scott, that, over the next weeks and months, we're going to see a 20% decline. No, they were predicting, or at least betting on, a decline in the short term. They got it today. Was that the whole of it? I don't know, but I took the profits and got out because the options only have one more week to live.
Well, so you just went along for the ride for a short-term play.
Yes,
and as you said, just to make sure our viewers understand, you took it off. You're no longer involved there. Pete is with me.
I am no longer in it.
All right.
That's true.
Pete's with me on the phone, right? Pete, you hear me?
Yes, sir. Absolutely.
Right. Yeah, thank you for calling in. It's a double dose of the Nigerians today. What's going on with you today?
Well, a couple of things, Scott. I've been watching Apple really closely. We've had 12 unusual hits just in the last 2 weeks in there, which stock was starting off at $129 a share back on June 14th. It's obviously been running. We've been tracking that. Everybody's been tracking that. But you go back to just a week and a half ago, they were buying the July 137 strike calls, Scott, and the stock was significantly lower, and the stock has exploded since. On Tuesday, they were buying the July 149 calls, so they continue to extend up. Because of that, when the stock actually was getting hit pretty hard today, on Tuesday, the stock actually got up to 143. Yesterday, it was almost 145. Today, it pulled back and was opening at 141. And I was watching it for a really long time. It kind of hovered around there, and I just decided, you know what? I think Apple makes a lot of sense. All of this bullish activity that's not just in July, it actually even goes further out, makes a lot of sense to me still. So that one was just a gut reaction. It wasn't based on today's unusual. It was based on all of the unusual options that we've seen for a while, expecting this stock to continue. It's already bounced a little bit. I expect to see this stock actually even as soon as tomorrow or maybe next week back towards that 145 level. So I was able to jump on a bunch of calls there.
It's only $2 away from that high, Pete, in an environment where we've talked about almost every day of mega cap FANG Plus stocks hitting new highs almost every single day, whether it's Microsoft or Amazon, Alphabet, Facebook. We've just been waiting on Alphabet to join that Apple to join that party, and it seems to be heading in that direction.
It is. And I would also say this, Scott. I'll give you a quick unusual for you, if it's okay, with Oracle. Now, Oracle, that's not a name we talk about, right? I mean, once in a while we talk about Cisco. I bought that about a month and a half, 2 months ago, just because it seemed like it was the right time. And it's not done a whole lot stock-wise. I still think when I look at valuation and I look at cash flows and everything else, and I just was listening to Rick Reeder talking about that, Oracle's in the same sort of a camp, except for the fact that Oracle is performing. As a matter of fact, we had buyers just yesterday. They were buying the 85 strike calls in Oracle. Stock immediately took off. Those options that were 30 and 40 cents went to over $2 rapidly. They came back again today, Scott, with this pullback that we are seeing in the markets, and they went into Oracle at the 87 strike calls. Again, around 30 cents is about what they were paying for the 6,000 of those. I think that this is another one of these stocks where I don't think it's done. I think there's still room to the upside, and I think that this stock absolutely can break through with 87 levels of yesterday and go a lot higher. It still only trades at 15 times earnings and $15 billion in operating cash flow. This is a name that I think gets looked over a lot, but we probably shouldn't do that.
Did you also have another one in a Chinese stock, Pete?
I did.
Yeah.
And that one's a little bit more risky because of the fact of exactly what you just said. The selling pressure that we've seen on a lot of these different Chinese stocks. This one's NIO, and you know, you just go back to June 30th, Scott. It was a $53 stock. Now here we find ourselves in the low 40s. And is it over? I don't really know, but if I'm in the options, I know exactly what the risks are. Today we had a buyer of 5,200 of the 43.5 strike calls. They were going for about $1.50. Stock was right around that area, trading around 43.50 at the time. So do I think that there's a little bit of a possible bounce back? Absolutely. And I look at this name and I'm thinking low 40s. It was just 53. I know there's selling pressure on these Chinese names, but I think this one made some sense, and I wanted to follow in on this unusual option activity.
All right, gentlemen, I love it. I know our viewers do as well. Dropping some knowledge on us today. Pete and John, we'll talk to you soon. I know I'll see you back on the show in the days ahead as well.